Okay, so now we are recording for people who are not here. Now we are getting into real kind of stuff, right? So in chapter 1, we went over some basic ideas and the tools, basically. We learned kind of tools. We learned tools. Now we have to start looking into specific topics and say, okay, apply those tools to some specific topics. For example, this topic is called job order costing. What does this mean? Well, we know what the object is, like cost object, right? Well, this is exactly what this is exactly one of the cost objects. It's called job, right? We can call it a product. It's called job because it might be a big product consisting kind of complex thing, not just a very simple product. There's something, it's called process costing, for example, in a different chapter, which we will not cover in this class. So that would be something different where kind of products are identical to each other, right? So it would be a little bit more simple because we could just average things, just divide things, cost into a bunch of units, right? But in this chapter, a job is kind of a unique product, right? Unique product. Now, this unique product might actually have a bunch of units in it. So imagine Levi's company producing jackets, then producing T-shirts, then producing different kind of pants, right? Jeans. Well, each one of those might be called a job, right? And then even within those categories, they might have a different model, of course. A couple of different, not a couple, but many different models of jackets, many different models of T-shirts, many different models of jeans, of pants. And each one of those would be called job, but of course each one of those jobs might have 1,000 units, 500 units, 3,000 units, etc. Right? So, but the point is that each one of them is different. Now, why this is important? Well, it's important because in this chapter and in the next chapter, and then in chapter 4 also, I think we said last time, we will work a lot on overhead. Overhead is kind of a big important topic in this class, and we will work on overhead to figure out how do we assign overhead to these different jobs. So let's start here, and again, here we are getting into real managerial accounting, real kind of nitty-gritty, right, into details. Okay. So every product needs 3 things, we said last time. It needs materials, it needs labor, and it needs manufacturing overhead, right? Now, you see here this variable and fixed in parentheses. It's important in terms of calculations and understanding how manufacturing overhead behaves, but it's not a critical thing immediately right now. So, for example, what is important is that these materials are direct, right? We know what this means. And labor is also direct. We can trace it directly to the product. Now, manufacturing overhead is indirect, right? It's indirect. We cannot trace it easily to the job. So we cannot say to the product. So we cannot say, well, like with materials, for example, we spend $10 exactly, we know, of rubber material or of jeans material, some cloth, some fabric, to make this jacket or something, or $10 of plastic, or a screen, computer screen worth $20 to put into this phone or this tablet or this computer, right? we can say that for direct materials because we can trace it directly. We know exactly this is how much it goes into this particular product. Same thing with labor, assuming that labor is direct, and we discussed this last time. Let's say this product requires 3 hours of labor to make. Well, if the labor costs us $10 per hour, then 3 times 10 is $30. So $30 of labor would go into that product, right? So that would be easy because we know exactly directly, we can trace directly 3 hours of labor to this product. But for manufacturing overhead, we said it's indirect cost. So we cannot easily trace these costs to each particular product, right? So this will be the key for us here. So in this calculation, we account easily for direct materials, direct labor, but then we have to allocate a portion of manufacturing cost to each product. And that's why this job kind of, not job, but just job, again, job costing versus process costing, which again, we will not do. It's important because each job will be different, right? Each product is different. So it will get different amount of allocation of overhead per product. So you can see what I just explained here. You can see it visually, right? So you have direct materials, direct labor traced directly to the product. And then you have overhead, which is allocated, not traced directly, but allocated. Well, how do we allocate this? How would you allocate this if I ask you, well, if you run a restaurant or a store, you're selling something in your store, how would you allocate your rent to each one of your products, right? So it's not easy. How much, I mean, people do it differently, right? They say, this is how much my cost is, overhead cost is $5,000 per month. And then what's the average amount of price that I will charge for my, products. And then I have to, sell this many units of this product, or I have to have these many customers walk into the restaurant to cover these costs. Of course, you have to include those variable costs in this if you want to get kind of to break even, but we are not there yet. So you're kind of averaging things, right? Sort of. And you're averaging them based on this, what is called allocation base, right? Allocation base. Again, this is all kind of terminology and that you don't need to memorize definitions for, but you have to just kind of understand well. So often for our purposes here, this allocation base or this cost driver will be machine hours or labor hours. Why? Because machine hours do most of the work in the factory, or labor does most of the work. Either one. Sometimes it's a combination. But we decide one of those. We pick one of those and say, well, let's use machine hours, or let's use labor hours, depending on what the structure or what our cost kind of cost structure of those two things is. How much these cost drivers kind of are driving cost of our overhead. So why do we pick machine hours and labor hours? Again, because it's traditionally been done that way too. So in the past, of course, the labor was doing most of the work, and now machines are doing most of the work. So those will be kind of allocation based. So you can see you're averaging things here. And it's even clearer here on this slide. So on this slide here, as I explained in narrated lectures, you see here all these different things that go into overhead, right? This is overhead pool. All of these things, different things go into this overhead pool. Now, factory insurance. How am I gonna, let's say you have $5,000 for factory insurance. How are you gonna assign $5,000 to different products that you have? A, B, C, D, E, F. I mean, you have a million products, right? So how are you going to assign factory insurance to each one of these products? It's easy to assign direct materials and direct labor. That's easy because you know exactly how much product A will use, product B will use, product C will use. But how do you assign overhead? Overhead. How do you assign this factory insurance? Well, you cannot assign it easily. So you put it into kind of one big pool, bucket, right? Overhead pool. You do the same thing with indirect labor, factory supervisory salary, rent on factory building. This is all indirect stuff. It's not direct. So you're putting all of this in one big bucket, utilities, security, etc. So you're putting all of this into one big bucket, and then you're saying, okay, so how do I assign this? And we said, you kind of somewhat average this. You average it based on what? Based on number of products? You cannot average it based on number of products. Why? I said it already, but let me see. People are following. Why can't you average it based on number of products?
Each product is different, I guess.
Alec, excellent. Thank you. Extra point. Imaginary. Put yourself, I will not remember it. So, excellent. Because each product is different, right? So if I say overhead pool is $1 million total, and I have, I don't know, 5,000, 10,000 units. Well, if all units are the same, then we can average, but again, that will be like process costing, which we are not doing here or in this class. But in job, all the costing, or kind of traditional, you can think of it as just traditional costing. Each product is different, right? So product A is different from product B, from product C. Imagine you're making shoes, right? So these are sandals, summer. These are regular shoes, dress shoes, and these are boots. Would you assign the same thing of same amount of material or labor to them? No, because they would use different amount of material and cost, and maybe different amount of labor would be to make them required. But the same thing with overhead. Would you assign the same amount of overhead, $10, to sandals, summer sandals, to dress shoes, and to boots, whatever? No, you wouldn't, because they're different, right? So how are we gonna then assign this? Well, we will average it again somehow. We can think of it as averaging, although we will average it by dividing this into what we said allocation base. It might be machine hours, or it might be labor hours, or something like that. Sometimes, if it's kind of just a trick question, it's a dollar amount of something, right? Dollar amount of something. So dollar amount of labor, whatever. That would just throw you off. What do I do? Well, it's nothing. It's just a dollar amount of, let's say, labor. Okay. But basically, we would then divide these 1 million into one of these amounts, either machine hours or labor hours or some other amount. And then we would get some average, right? Let's say $3. $3 per machine hour. Let's say $3 per machine hour. Oh, or $3 per labor hour. And now we say, oh, now I know what to do. Now I will take these $3 per this machine hour and then look at product A and say how many machine hours or labor hours or whatever this product is using. Well, this product is using only one machine hour. Well, if it's using only one machine hour, then $3 times one machine hour is 3, right? So you would basically assign $3 to product A. Now, product B is using 2 machine hours. It's dress shoes, takes a little bit more time. Okay, well, if it's two machine hours and each machine hour cost me in overhead, cost me $3, then 3 times 2, $6, right, for product B. And then boots are kind of complicated, whatever. They take 3 machine hours to make. Okay, well, if they take 3 machine hours to make and each machine hour costs me $3, then it's $9. So you see the idea. right? Everybody good so far?
Yes.
Yes.
Okay, very good. All right. All right, I need to erase this before moving on. Okay. Okay, now this is an important slide, okay? In a sense, it's good to memorize it, but even better to understand it. So you will need to do both. Understand it later on, but we will discuss it now. But kind of memorize these three amounts, because sometimes you will get a bunch of different numbers. And now, what do I do with this? Which amount do I pick to multiply with what, and to find the difference between what, right? So kind of a number of different things. So you need to kind of have some kind of progression, right? You need to have some kind of progression, and this progression you get by working on problems and practicing problems, and so that's a good way to get progression. But of course, you have to know how the progression moves, the steps. So you see these three different overhead amounts are in different colors. So with job order costing, we will have three different overhead amounts. First, we will have estimated overhead. This is the total overhead that we expect. That's the key word. It's kind of our prediction, right? Prediction, how much overhead we will use during the period. Usually it's done for the whole year in advance. So on January 1, we want to have some estimate of overhead and say, we think we will use $1 million of overhead this year from January 1st to December 31st. Now, are we perfect? Are we perfect? We are not perfect, right? So we are not guessing. It's not like we are just throwing things. We wake up and we say, you know what, this will be $500,000, $1 million, whatever. No, of course, we are basing this on some previous things, on our experience, on last year and things like that. Well, we are basing it also on prediction, on estimates, how much volume production we will have this year. So we will call this estimated overhead, okay? Now, why are we estimating this in advance? Well, for a couple of reasons. One is that we will learn this in the second part of the class after the midterm when we start doing budgeting. So we need to have some budgets. We need to plan in advance. So you already see that this class should be interesting, right? Should be actually fun, because it's not just memorizing things. Well, this goes here and this goes there, and this is called this way, and then I have to deduct this from that. And here you have that's why it's called also. I mean, we end with decision making a chapter, because all of this leads to decision making. So you actually have to start kind of thinking and finding this interesting and saying, there are a lot of pieces here that might be actually useful, right? So for example, I need to be able to budget. I need to be able to create a budget for the whole year, which means I need to be able to plan. Kind of have to see the future a little bit in a sense. But of course, we are never perfect. Now, besides budgeting, why do we need to have estimated overhead? Why don't we just use actual overhead? Actual overhead. Well, it's actual. You might say, well, don't I have to use actual overhead? What actually happens? That is correct. But unfortunately, we do not know actual overhead until the end of the period. Until the end of the period. Because things happen between January 1st and December 31st, right? Things happen. Maybe we increase production, maybe we decrease production. Maybe we hire more people, maybe we lay off people. Maybe costs change from last year, increase or maybe even decrease, right? So the bottom line is that we do not know what our actual is until the very end. On December 31st, actually probably later, we do our financial statements and everything. We say, this is how much we spent on overhead last year, right? So we cannot rely on actual, but what are we doing in between here? What are we doing in between? In between estimating overhead at the beginning of the year and then looking at the overhead at the end of the year, how much we spent, what are we doing?
Estimating.
Well, we estimated at the beginning of the year, but Alec, you wanted to say something.
Yes, we're allocating that estimation to each product that we made, and we're applying that estimate.
Very good, very good, very good. Excellent.
Push the door.
Excellent.
3 to the door. The door that is aisle 3. Just go there and push the door. It's open. It's not?
Okay, yes, Milex, I will have to, I don't know how to say, get you out of the class if you continue unmuting and we hear conversation behind. So, so as Alex said, what will happen in between is that we will actually make things, right? We will produce things, produce products, make products. And we will have to assign some costs to those products, correct? We have to know how much our inventory costs, how when we sell something, we have to know how much it costs us to make, so we can put it in cost of goods sold. So to do this, we cannot use actual. We cannot, because we don't know it yet. Estimated is kind of a projection. So we will have to use portion of this portion. We will have to use this estimated overhead, not a portion, but in a piece of it to get to our predetermined overhead rate, which is here. And then we will apply costs to our products through applied overhead. This is why it's called neatly applied overhead. So you remember, well, what goes into, so this is an important point, and this is why I spend this much time on this slide. Which cost actually goes into the product? So when you start reading the textbook and you see, I don't understand this, why am I not using this actual, why am I using this thing, why am I using predetermined overhead rate? Well, because you need to apply cost somehow. You cannot apply it through actual. Estimated alone is just estimated overhead, but what we will use then, we will use the actual amount of allocation based and multiply it with predetermined overhead rate, and then this will give us our applied overhead. And applied overhead will be in our products, right? Applied overhead will be in our products. Now, at the end, we'll apply the overhead that is in our products cost will it be equal to actual overhead? Well, if we are perfect, if we perfectly estimate things, or if we are lucky, if you want to say, although I don't know if I would call it lucky, but then they will be the same. But usually they are not the same, right? Because we are not perfect in predicting what will happen with our first estimated overhead, and then also what will happen with our amount of allocation base used. Which amount will be in our financial statements? Well, which amount will be in our financial statements? Well, actual overhead, of course, actual overhead. Actual overhead will be in our financial statements because we will keep track of actual overhead throughout the period, but we will keep track also of applied overhead. And then we will reconcile at the end these two amounts. Okay, so this was a long slide, but important slide. This was kind of theory. Now we will I hope you are fine with this. And then you will see through example now how this works. Any questions about this? Any questions about this?
So to calculate applied overhead, you have to use the
So
overhead
Professor,
rate
I'm
and the
sorry,
actual amount
Sean,
times the
go ahead.
actual amount. So for applied overhead, you have to use the overhead rate and the actual amount. Where would you find those figures?
Yes,
Or
very
they
good.
will be given?
Excellent, very good. Okay, so we will get to this now in a second. So you will see through example where we will get the actual amount of allocation base, just to make sure, not actual overhead, but actual amount of allocation base. Yes, usually we are given that amount, but predetermined overhead rate we calculate by using estimated overhead and estimated allocation base, right? Okay, so we will get to these steps. That's a very good question. But for me, it was important that you understand this idea that there's something in between estimated and actual, and why we are using actually this applied overhead. Why we have to bridge this estimated and actual. Why is, well, because we are making products, we are making them on January 2nd, 1st. We make a product, we have to put some cost into this product. How much cost? Well, $10 for direct materials, $5 for direct labor, and how much for overhead? Well, let's say $7. Well, how did we get these $7? We cannot just use estimates. That would be kind of, well, just kind of prediction. Well, but a part of it, yes. But we cannot use actual because we don't know it. That's the bottom line. We don't know the actual because actual will be known only at the very end. Wendy, go ahead.
So we estimate at the beginning of the year, we estimate the overhead. Then in the middle of the year, we apply it. And at the end of the year, we reconcile, estimate it, and apply it to get the actual.
Okay, excellent, excellent, Wendy. I like the way you put it. The one thing that you said is not correct in a sense. You said applied in the middle of the year.
Well,
Not
in
the middle of the year, but
in the
throughout
whole
the
year.
year. Right.
Yeah,
the whole
throughout the
year.
year.
Very good. Excellent,
Okay.
excellent. Just because it's here in the middle doesn't mean that it's just in the middle of the year. Yeah. So January 1st, we are applying the cost to product right away. We will also, in addition to estimating overhead at the beginning, we will also estimate this amount of allocation base, right? So this will help us actually get our predetermined rate, and then we'll multiply it with actual. So let's go to the example. Okay, we explained this. So these are the 4 steps. Textbook gives you one way. You might, like to remember it different way. Whatever works for you. Okay. Are we here? Can you hear me?
Yes.
Yes.
I lost you next to. Okay. So these are the 4 steps that I recommend that you use. And again, it's important kind of to use these steps just in a sense that you get a routine. You get kind of a routine practice, right? So you're just going through always same steps. So when the problem looks different, see, because people are often focused on, let's say, homework problems, or they get those review problems, and they think that problems in the exam will be exactly the same. So they just pound on those problems and they basically memorize those problems. But then the problems on the exam are, let's say, different, right? And now they don't know what to do. But that's because they just memorized problems. They did not develop their own way of going about the problem. So when you get the problem, for example, these 4 steps, and then you say right away, okay, this is this type of problem, this topic. What am I looking for? I am looking for estimated amount of overhead. And I'm looking for estimated amount of allocation base, those machine hours or labor hours or whatever, right? Okay, so I found this. Very good. Now, what will I do with this? That's a step 2. You will find predetermined overhead rate, POHR. That's that average that I talked about earlier, kind of an average, right? That's the rate, $1 million over whatever number of machine hours or labor hours. So now you have this rate. You are done at that point. Once you find the rate, you are done with estimated overhead. You don't care about estimated overhead anymore. Again, why this is important is because then you have different numbers. Again, this is actual allocation base, estimate allocation base numbers, this and that, whatever. If you go back to the same allocation base estimate, you will get the same number, and then you compare it, let's say, to applied, you get wrong answer, right? So the bottom line is you do the step 1 estimated. You find your POHR in step 2. You're done with estimates. You don't care about estimates anymore. Now, you don't also care about actual overhead until the very end, until reconciliation. You don't care about it. So what you care about now basically is that how do I now apply this POHR? How do I apply my overhead to my product? Well, in that case, you will now look for what? You will look for actual allocation activity base, actual allocation base, right? Here you had estimated amount of allocation base, but here you will have actual amount of allocation base. So somebody asked earlier, and you will multiply that actual allocation base by POHR. So now somebody asked earlier, how will I know what my actual allocation base is to get my applied overhead? Usually you're given, right? You're given straight allocation base. Let's say, like I said earlier, this product A used 1 hour, 1 machine hour. That's actual allocation base. This product used 2 machine hours. This product used 3 machine hours. Then you're just multiplying this POHR by those actual allocation bases. How much the product actually used. Now, let me ask you a question. How do you know what the allocation, well, you're given allocation base, of course, in problems. But I'm saying in general, how do you know what the actual allocation base is? How do you know?
You find it through checking how many products you have produced, meaning how many hours you have applied, or how many allocation base you have applied on your products, and you type it, you multiply it by the predetermined overhead rate, and that's how you find how much you have applied.
Okay, let's say, how do you find for product X what the allocation base is for product X? That's correct what you said, but I want it to be very kind of very concrete, very specific.
Okay,
very kind of...
for product X, how many allocation base we have allocated to that product times the rate that, how many machine hours, let's say, how many machine hours are needed for that X product, and we multiply that with the predetermined rate.
Okay, but you're saying how many are needed, were needed, will be needed, which one?
Have been used, because you have made the product. So
okay,
after
very
you make
good,
the product,
very good. Excellent. Who is this, Alec again, or?
Yes.
Yeah, for some reason I cannot see.
Yeah, I cannot see it either.
I cannot see participants, but that's excellent. Well, you made the product, right? You made it. So now you know I used 3 hours to make this product. I used 5 hours to make this product. So that's the actual allocation base. Now you know. So you can see that this applied overhead, is a combination of something real, meaning actual, what actually happened. I used 3 hours to make this thing, and something kind of estimated, right? This POHR. So this applied overhead is based kind of a combination, and it helps us. This is the bridge between our estimates in our estimated amount of overhead and estimated allocation base, and what actually happens, right? And what actually happens in terms of overhead amounts, we're just keeping track of it. We're just keeping track. So now I hope you understand a little bit better how the applied overhead connects to the actual product and why we're doing it the way we are doing it, and we're just keeping now track on both sides, actual and applied, and we will compare them at the very end. But so far we are good in terms of sending cost to the product. And then finally in step 4, which sometimes is not required at all. Sometimes you're not asked to reconcile anything. You just asked, well, how much did you apply to this product? What's the cost of this product? Well, right now the cost of this product is whatever you put in through direct materials, direct labor, and applied overhead. And now now you have step 4 in case you are asked, well, now you compare actually what actually you spend and what you put into these products and then reconcile, right? So that would be step 4. Okay, so now we go through each step kind of in detail. We learned this in chapter 1, that the total cost is equal to fixed cost plus variable cost, which is expressed in this equation here. So A is fixed cost and BX is variable cost. So that's how we might have to sometimes, I mean, most of the time we are given overhead amount straight, right? We are told overhead for this year will be estimated, will be $1 million, boom. But sometimes we have to combine fixed and we're just given overhead in pieces, fixed and variable, right? So sometimes we have to combine them. Fixed is 500 and variable is 300, but total is 800. Thank you. That's good. But sometimes it's even a little bit more broken down in terms of variable. It says, well, fixed is 500, but variable is $3 per whatever allocation base number is. $3 and 100,000 machine hours. Well, that's 3 times 100, 300 plus 500 is 800, right? So sometimes we need to do this again. A lot of the times we're just given straight the overhead amount. So step 2 is then again simply to divide the total estimated overhead by total estimated allocation base, right? We said we are in step 1 and 2 we are still dealing with estimates. Once we are done, once we have our POHR, we don't care about estimates anymore. Okay. I hope I repeated this enough times. So now we are in step 3 applying this POHR or multiplying this POHR by actual amount. As Alex said, we actually know now how many hours we used because we made these products. So we multiply whatever POHR is $5 per hour times 3 hours, for example, 5 hours, whatever the number of hours the product used, one product or many products. And this gives us our applied overhead, which we apply to the product. And then finally in step 4, again, sometimes it's not even required. We compare the applied and actual. We will learn how to do this in a second. And then we get what is called over or under applied overhead for the period. What does this mean? Well, maybe we applied too much cost to our products, or maybe we applied too little cost to our products. That will depend. When we put applied and actual next to each other, we compare them and we say, what's the result? Did we apply the same amount, which means there is no over or under apply, just equal? Or did we apply too much overhead, which means over apply? Or did we actually spend more overhead than we actually applied? Then it's under applied overhead, right? Okay, I just explained this. Okay, so this is the example, for example, very simple, straightforward example. The company estimates estimates that it will require 160,000 labor hours to meet the coming period's estimated production level. In addition, the company estimates total fixed manufacturing rate to be 200,000 and variable manufacturing rate 275 per direct labor hour. So what do we do now? Well, we need to combine this to get total manufacturing overhead. Total manufacturing overhead. Well, 200,000 is fixed, right? 200,000 is fixed, so that's here. And then the variable portion is what? 275 times 160. We are dealing all with estimates right now. We are looking for total estimated overhead, and we get the amount of 640. Right, so that's kind of step one. We identify. Sometimes we are just given, okay, 640,000 is your total overhead. But if you're given in pieces, fixed and variable, you combine it, you get to 640, and you say, okay, 640 divided by now what? Divided by estimated direct labor hours. This will give us our POHR, $4 per direct labor hour. $4 per direct labor hour. So steps 1 and 2 are done here, right? Steps 1 and 2 are done here. Now, we have POHR. Do we care about our estimates anymore? Estimated overhead? We don't. We don't care about estimated overhead. We don't care about estimated production levels or activity level, I should say. Unless there's a question, something about, I mean, what would be, I don't know what the question would be, like, what's the what's the difference between actual level, estimated level, and I mean, actual level and estimated level, it would be like asking what's the difference between 5 minus 3, right? So there's no point. So basically, you can forget about estimates at this point. You have your POHR. That's what you want. Now, corporation's actual overhead. See, actual overhead. It's not estimated anymore. Actual overhead at the end of the year is actually 650. So remember, we calculated, estimated that it would be 640, but it actually came out to be 650. Do we compare these 650 and 640? No, because 640 are just estimates, right? We did not apply 640 to the product. Well, in a sense, we did through the rate, to these $4. But to apply the cost of this or those $4, we need something else. And that's what? Actual activity, which is 170. Which is different from 160 here. So clearly we will have different number than 640. And we said we forget about it. So why I'm repeating this is because you see, when you get a bunch of different numbers in the same problem, now you're asking yourself, what do I compare this to? Well, if you're following the steps, now you know. You don't care about 640 anymore. You're looking to compare 650 to something else. What is this something else? That something else is applied overhead. How do we get applied overhead? Well, we say $4 POHR times actual activity. We said actual, combination of actual and kind of imaginary, kind of estimates, right? So 170 times 4 is actually 680. So we applied $680,000 to our products. We applied $680,000 to our product. You know, you might say, oh man, I don't get this. Now we are at 680. We actually spent 650. We estimated 640. This doesn't make any sense. Why are we comparing? You know, why don't we compare 650 to 640? Why did we go through all this trouble? Well, we discussed this in previous slide, right? We need something to bridge these 640 and 650. We need something to bridge this. And we are bridging it with 680. But you say, how are we bridging it? It's totally different. Well, we will simply reconcile it at the very end. 680 and 650. We will reconcile it. But why is it different? Well, why it's different? I'll leave you to think about it, to look at these numbers and say, well, why did it come out, for example, so much higher than even actual? Or, well, look what the number is here, it's 170. So we did not estimate properly our allocation base. Our allocation base is kind of low for the activity that we had this year, 160,000, but we probably produced many more units, which is a good thing. So we actually had more labor hours, 170,000. But because our allocation base 160 was a little bit lower than it should have been, then our rate is a little bit higher, right? So now when we multiply these four by 170, we actually get 680. And it's a good thing that we did not spend a lot more on overhead also. I mean, in general, you might say, so what is better, over-applied or under-applied? You know, the question is not what is better, especially for our class here, for us. We just need to compare the difference between the actual and applied, and we need to find the number, reconcile it, and say, okay, this was the number that it should be in cost of goods sold, because that's the bottom line. What amount is in the cost of goods sold? Right now, what amount is in the cost of goods sold? Right now, which amount is in cost of goods sold? Let's say we sold everything. I mean, let me put it this way. Which amount is in inventory and cost of goods sold?
$680.
Sorry?
680,000.
Excellent, very good. 680. We said which amount is in the product. Applied overhead is in the product, right? Applied, not actual. Applied amount is in the product. So 680 is in the inventory and work in process and finished goods and cost of goods sold. $680,000. But is this the right amount to be in those products of cost? Well, we see at the end it's not. It's actually 650. So we didn't actually spend 680. We spent 650. So, but in general, we don't care if it's over applied or under applied. In general, we like that it's over applied, because that probably means, especially if our cost is fixed, this is kind of just an extra. You don't need to know this, but if you care about it, maybe it helps kind of just understand something or grasp. If most of the cost is fixed, then having more activity, more production is good for us, right? Working more is good for us, because our costs are fixed no matter what. So if we are spreading more cost, or I should say, that same cost, if it's fixed, mainly fixed, we're spreading it over a larger number of units, that decreases our cost per unit. So that's a good thing for us. So if you're asking yourself, is over applied or under applied better, or do I care about this? First of all, you don't need to care about it. But second, probably over applied is better, because that means you use your capacity well. You will just have to reconcile it at the end of the year. That's all.
Professor?
Okay. Yes.
Do we use this number to estimate for like next year, or this information only used for this period, and then the next year we just estimate a different number?
Okay. Again, unfortunately, I cannot see for some reason the names, but who is asking? And then sorry.
My name is Julia.
Julia, very good, Julia. Very good question. Okay, but be more specific. Which number? What do you mean? Which number are you talking about?
Well, the applied overhead, I assume this is the number that we would use.
Okay, well, applied overhead is, again, just a combination of our POHR and actual activity. Now, think about it. What does it consist of? What do these numbers mean? What do they mean?
Well, that's the amount of hours that we spend multiplied by the
To do
the
what?
cost
No,
to
don't worry
produce.
about the dollar. Don't worry about the dollar amount, but the amount of hours, for example, 170,000 or 160 before, 170 this year, we spend to do what?
To produce the whatever items we're producing.
To produce the products. Very good.
Yes.
Well, so you can imagine that if we expect that our production would be the same next year, then what would we do?
Well, we would estimate that the overhead would be the same.
Right. Well, not necessarily, again, the overhead, because overhead, we might estimate the overhead to be more than 640,000, which we had here, remember? So we might then say, well, actually, the overhead will be 650 as it actually came out to be, right? But so it's kind of a separate thing between overhead and activity, right? So we might say our overhead for the next year will be then 650 because that was what actually happened this year. If we estimate the same amount level of production, and our hours will be 17, right? Now this again might change. So things might happen in between during the year. So our applied overhead and even actual might end up being different, right? But yes, you would use these numbers. You would use these numbers to estimate, let's say, for the next year, based on your projections. If you think that you will have same amount of production, or maybe, I mean, that's what smart people do in companies, right? They do a lot of projections. They say, how many iPhones do we expect to sell, right? And mistakes are then costly. I mean, you might expect to sell, well, of course, Apple has a tremendous capacity and it outsources a lot of stuff, so it's not their kind of cost. They're just ordering stuff then and assembling things and whatever. But if you're a small kind of producer and you're thinking, should I expand my production? Because these 170,000 labor hours signify what? Well, they signify, for example, your capacity, for example, or something like that, or 160 before, right? You don't want to have too many workers or too many machines if you don't think you will have certain level of production. But now you're estimating for the next year, and you say, we will have the same production, we will grow 10% or whatever. So now we have to buy 5 more machines or things like this, right? What was that? What was your name again? I'm sorry.
Julia.
Julia, right?
Yeah.
So you get this, right? You understand this?
Yes, thank you.
So yes, we would use these numbers as prediction.
Quick question.
Yeah.
If you want to know if it was over applied or under applied, if what do you compare it to? The actual versus the estimated, or the actual versus the applied?
Okay, I think I said it already 10 times. So that once we pass the POHR, you forget about estimated. So see, that's a good question. It's a good question as an example that it's easy to forget this. So that slide is important, those steps, and say, okay, after the POHR, I forget about estimated amount. So what are we comparing this to find if it's over applied or under applied? We are comparing actual overhead to applied overhead. Actual overhead to applied overhead. Actual overhead is 650 in this case, and we applied 680,000 of overhead to our products, which means we applied $30,000 overhead too much to our products. $30,000 overhead too much. So what will we do now? We will reconcile this with our cost of goods sold, or maybe inventory if we are doing it, which we will skip also here, kind of proportional reconciliation with work in process and finished goods accounts. but we will apply these 30,000 in full to cost of goods sold. And we will simply, because we applied too much, so we said earlier, I think Alex said, which amount is in when I asked which amount is in of overhead is in cost of goods sold. Well, which amount of overhead is in cost of goods sold? This amount, right? This amount is in cost of goods sold. So we are keeping track in this account here, kind of a control account. We're keeping track of these expenses. And applied, we know because we are applying it to products, right? Based on the amount of usage they use and POHR, we're applying it to products. So we end up with 680. But on this side here, we are but we are just keeping track of costs, and we end up with 650. This is our actual cost. So in the end, we'd say, well, we applied 30,000 too much. The balance is on this side. So it's over applied. It's over applied. So now you don't need to use the accounts. I talk about this in narrative lectures. You don't need to use the accounts. I don't know if there will be any questions, let's say on the exam about journal entries, or usually I don't test on journal entries. That's 2101 class, but you have to go through journal entries anyway. But you cannot do all of this without the T account. So you don't need to worry about, am I debits, credits, and am I, putting it on the correct side or not? You can simply remember, well, I applied too much, right? I applied too much overhead to my products. So now there will be some amount here, whatever the amount is, 5 million, right? 5 million, because remember it includes direct labor, direct materials and stuff. So now we have here $5 million in cost of goods sold. Well, we will reduce this 5 million for 30,000, right? So we will get 4 million, maybe 5 million is too big of a number for this example. Well, maybe, let's say 1 million. Right. So we will decrease these 1 million for 30,000. So we will get 970,000 adjusted balance, 970,000. If you like the accounts and you want to use the accounts, then you simply remember that this is a control account. We need to bring it to zero each year at the end of the year. And we are right now at the end of the year. So we say $30,000 here over applied. Well, then we have to put 30,000 here to bring it to zero, right? And that's a debit here. So we will credit this here on the cost of goods sold side. So these 1 million and these 30 here, credit will become 97, right? 97. But again, you don't need to do this. You can simply say here 1 million. What are my cost of goods sold? 1 million. And I applied too much cost to my products. For how much too much? 30,000. You don't need to use the account here either. Just comparing two amounts next to each other. And one is higher than the other, or one below each other, it doesn't matter. So applied is higher for 30,000. Well, then you will just say here minus 30K. So that's 970K. My adjusted cost of goods sold, adjusted. Okay. Any questions? Any questions? Everybody's good? Okay, very good. Again, we just covered this. If you had under applied, then it would be reversed. But again, you don't need to worry necessarily about the account. Then, well, your overhead is your overhead here is actually reversed. Let's say actual is 680 and applied is 650. Well, in that case, you're thinking, well, I actually spent 680. But I put into my product just 650. So that's a $30,000 difference, but $30,000 less than I should have put in my products because I spent them, right? So then you will just go back and say, well, now I have to add $30,000 to cost of goods sold. I have to add. So it would be 1 million plus $30,000, not 1 million minus 30,000. Right? What will be the effect of over applied? Well, the effect will be, of course, that net operating income will increase. Why? Because we would deduct cost from our cost of goods sold. So if we decrease cost of goods sold, that means our income will go up. Our cost is lower, right? In the opposite case scenario, if it's under applied, then our income will decrease, right? And this is a recap, so it's a good place also to start because and go to some exercise because I cannot see anybody. Okay, any questions about this this whole thing? Any questions about this whole thing?
Professor, I couldn't clearly understand that last part about underapplied. What happens when it's underapplied?
What do you mean, what happens?
The last thing you explained, you said when you reversed the example and it was underapplied instead of overapplied. What happens to the 300,000 that was underapplied?
Yeah, well, I mean, it's simple because it's just the opposite, right? So if it's overapplied, you put too much cost into your product, let's say for 30,000 as before. And so you have to deduct those 30,000 from cost of goods sold. But if it's underapplied, that means you did not put enough cost into your products or into your cost of goods sold if you want. So in that case, because it's reversed, right? We said if it's underapplied, let's say it's 680 actual, but 650 applied. So which one is higher? Well, the actual is higher. And actual represent what actually happened, what you actually spent. So you say, okay, I actually spent 680, but my applied is 650. So I did not put enough cost into my product. So now I have to, what's the difference? 30,000. Now I have to add 30,000 to my cost of goods sold. I have to add because I spent them, right? Go over the narrated lectures. So under applied, need to add different to cost of goods sold, reduce the income expected. Very good. So this is Wendy. Very good, Wendy. Okay, let's go to a couple of exercises and then okay. So this is these are good exercises. You might think this is no, this is kind of simple or whatever. So go through these narrated exercises on these. I pick them for a reason. I pick them because sometimes they have not tricks, but the little things, little details that you have to realize. Okay. Not everything is just given to me straightforward. I have to think about this a little bit. So, because during the exam you have to be able to do that. So this is exercise 2.3. What is the total manufacturing cost? That's what is okay. So this job consists of 40 units. What is the unit product cost for this job? So let's go straight to question 2, which includes, of course, then question 1. And that's how usually questions are on the exam. That straight to the point, not any steps. So it's kind of easy for you to follow. And that's also what students sometimes say. Well, I think I said it last. Everything is easy in the class, but that's because we're going through all the steps. But okay, so this company has a POHR, plant-wide $14. So we are given, you see here, straight POHR. So we don't need to worry about estimated allocation base, estimated overhead, estimated. We are given POHR already. Okay, and we asked what the unit product cost for this job is. Well, before we get to the unit, we need to figure out how much this job cost, and then it will be easy once we figure out the total, just to divide into 40 units to get per unit, right? We always remember, again, procedures, steps. What goes into product? What goes into product? Direct materials, direct labor, manufacturing overhead. Okay. So I'm looking right away. What are my direct materials for this job? Job A500 requires 231 in direct materials, 153 in direct labor. Okay, they're here. Boom. Now overhead left. How do I get my overhead? Well, we would go through those steps estimated to find POHR, but we already have POHR, $14. $14. So we need to multiply our POHR by something, right? What is this something? Well, the actual allocation base. Actual allocation base. What's the allocation base here? Anybody? What's the allocation base? What's the allocation base? Nobody?
Direct labor reach 17.
No, that's not the allocation base.
14.
Is it 40?
No, that's not the
40.
allocation base.
40.
Huh?
40.
40. What do you mean by 40? What is 40? 40 units? That's
Right.
not the allocation base.
Isn't it direct labor hour? Because it says
Very
direct
good,
labor.
Alec. Very good. Excellent. You're told here, predetermined overhead rate is 14 per direct labor hour. So direct labor hours are your allocation base. But 17 is not direct labor hours. 17 is how much you pay your workers. $17 per hour. Okay, so you will look at this problem later on. Now, how does this help me? I still don't know what my allocation, how many direct labor hours this job used. I'm not told anywhere. This is why I'm saying this is a good problem. Well, but you say, okay, let me see. Direct labor is $153 they spend on direct labor, and they paid their workers $17 per hour. Well, if I divide 153 by 17, I will get 9 direct labor hours. So that's your allocation base, right? That's your allocation base, 9 direct labor hours. So first you identified here that direct labor hours are your allocation base. They could have been machine hours, but then of course you would have other information here too. And now you have to find those direct labor. How many hours did these jobs actually use? Well, you're not told, but you figure it out. You say, well, they spend. Now you might say, but here you're talking about overhead, but here you're talking about direct labor, but it doesn't matter. It doesn't matter because direct labor hours are the allocation base, which means that direct labor hours were used when they figured out what? POHR, remember? Overhead estimated divided by, say, in this case, direct labor hours. Not 17 per hour, that's just what they're paying the workers. So you have now, so basically you have 2 rates for direct labor here, in a sense, if you want to. What are the rates? The rate for direct labor per hour that they're paying for workers is what? Is what?
17.
Right? You're told here. But direct labor per hour for overhead is what?
14.
14. Excellent, excellent. Two people who are saying this was the same person. Excellent. So you see, they're both direct labor, but this is direct labor for workers, actually direct labor. But this is direct labor per hour for overhead that was figured out in the POHR. That's 14, right? So now we will multiply this 14 by 9. So that's $126. So this is your overhead applied to this product, 126. So the total is 510 plus materials and labor. And now we divide this by 40 units, we get 1275 per unit. Right? So that would be the answer to this question. It's a very straightforward question, very straightforward, other than this kind of little detail trick. Well, where do I get this allocation base of 9? Well, you get it like this. You get it through whatever it said here. It could have been said, it could have been machine hours, but then you're told total machine hours are this, and overhead for was this, and then you would find POHR, and then also, and this job used these many hours, machine hours, for example, something like that. Okay, let's do one more, and then I'll leave you to go through them on Blackboard. On Blackboard. Let me see if there's anything. Okay, this is kind of a full. Let me see this one. Okay, this is what I just described. Let's maybe there was something there. No. Let's do this one. It looks kind of very busy, right? It looks busy. So now, as somebody asked earlier, which one is over applied? And as you can see here, you don't care about over applied or under applied because you're looking for just a job, specific job, right? Over applied and under applied we're using usually when we are looking at the total overhead at the end of the year. So in these cases here, we're just looking for specific jobs, specific product, or then per unit how much they used. But let's look at this one because it has a lot of different numbers in different places, so it's a good example. So this company, so what's the, you start with the question always, right? So it says compute the predetermined rate. Of course, we need to know this. Compute the total job cost for the Xavier company engagement. So of course, we need to know then POHR. Okay. So we say, again, we start with what? Well, what do we need to make a product? Direct materials, direct labor, and overhead. How much is our direct materials? 38,000 given here. How much is labor? 21,000 given here. Okay, so we have this. Now we need applied overhead, right? Applied overhead. To get applied overhead, what do we need? We said we need 4 steps. The first step is to find total estimated overhead. Do we find it anywhere? It says company estimated 600 of fixed overhead cost. Actual overhead cost is 692. So that's not the answer. Okay, so it looks like we have to combine things to get to total estimated overhead. Well, we have 80,000 of estimated direct labor hours, and that's our base. Right? And they're paying 50 cents per direct labor hour in variable overhead. So we'll multiply these two. So that will be what? $40,000, right? And we have 680 here in fixed. So the total will be 720. We have it here, right? $720,000. Okay. So that's step 1. Step 2 is to find our POHR. Well, we will divide it by those same 80,000 because that's the estimated number of direct labor hours. 720 divided by 80, this will give us POHR of 9. So that's our step 2. And step 3 will be to multiply this POHR to get our applied overhead. And applied overhead will be what? To multiply POHR by actual now hours, actual direct labor hours. So not these 80 because we will get to the same point then of 720. But with actual hours. And what are the actual hours? It says here 83,000 actual hours. 83,000 actual hours. You see, if you know what you're doing, your process, you're picking always right numbers, no big deal, very easy. So you say $9 times actual direct labor hours, but actually we're not looking here for a total. So we are looking just for this job, and this job here has $280 hours. I'm sorry. So you would have picked $83,000 if you were looking for the total overhead, right? Total overhead. But we are looking just for this job. So we will multiply $9 in predetermined rate times 280 direct labor hours here, and we will get 2,520 in our applied overhead, and that will be added to our direct materials and direct labor, and the total cost for this job will be $61,520. We are not asked here for units. We are not given the number of units, I believe, in this job, so we don't care about that. But that's the answer, 61,520 now. Okay, almost 2 hours, so that's good. Any questions? Any questions?
Professor, I have a question.
Yes,
So to get the applied overhead,
I can hear you. Speak up a little bit louder. I can hear you.
to get the applied overhead, I know it's $2,520. How you went over it pretty quickly. How did you get the applied overhead again?
Say it again.
How did you get the applied overhead again?
Well, first you had to find POHR, right? POHR is here. POHR is here. And then once you find POHR, you multiply it by the actual hours. Now, first I said you multiply it by 83,000 because I was thinking about the total, right? Of course, but we don't care about the total overhead here. Total applied overhead. We care only about this job, and this job used only 280 direct labor hours. So that's the actual. Those are the actual hours that labor. So these 280 are part of these 83,000 here. But again, we don't care about the 83,000. We care in this problem specifically. We care about 280. So we multiply $9 in POHR by 280 direct labor hours, and we get 2,520.
Okay,
so
thank you.
Yeah, that gives us our applied overhead. In this case, also, we don't care about over or under applied. We are not asked for this, and usually, again, we would look for over or under applied when we're dealing with totals. So, for example, if we multiply 9 by 83,000, we will get some total applied overhead, and then we would have some amount somewhere that it says, well, actually it says here, the firm's actual overhead cost for the year are 692,000. So then we would apply that, compare that amount with 692, and we would see what the over or under applied is. So that's a good exercise for you. So you can look at this and say, what would be actually over or under applied here? Not just for this job. We cannot do this just for this single job, but for the total, for example, what would be the result? Right?
Professor, I have a question.
Yes. Yes.
So, if I were to put just like 9 instead of putting 9 per direct labor hours, would I lose points?
I don't care if you. What do you mean? You mean on the exam or something, or?
Yeah. For example, on the exam.
Well, on the exam, you just ask for the number. You're not asked, you might have to keep your scrap sheets in case we asked for it. But I don't care if you say, that's a good thing for you to keep track of things. But in terms of, you will not be asked to say, nah, that's like on the homework and things, I understand. But on the exam, it's like you just asked for the answer. So the answer is, for example, 61,520. That's it. So you need to get the answer. You don't need to label it that this is direct materials
Gotcha.
here and this is direct labor, as long as you can calculate, right? But it's a good thing. It's a good thing to label things because it's easy to get lost. So just kind of to be neat, right? It doesn't cost you anything to label. You're just keeping track in your mind that this is your allocation base. This direct labor hours. This is your allocation base, right? Because you might be given here machine hours, labor hours, whatever, and then you have to read carefully, and it says, see, predetermined overhead rate is based on direct labor hours. So just kind of, you just keep for yourself, keep track of things and say, okay, direct labor hours are my allocation base. It's a good thing to say here also, you know, $9 per direct labor hour in overhead. So you don't confuse it with some, like I said in the previous example, you know, you don't confuse it with direct labor hours, some amount, let's say $10 or $15, that is applied to direct labor in terms of wages, right? So, but no, you don't need to worry about it. You need to worry about getting the correct number here. Anybody else? Okay. All right. So